5 seconds to the open.
Ready?
Who wants to get this thing started right about now?
Welcome to Follow the Money Weekly with your host, Jerry Robinson.
Welcome.
Not just some guru.
Oh, really?
Your host is an economist and a best-selling author.
What an interesting news item. I'd better write that down.
And just someone who likes to make money and help you to make money. Welcome to Follow the Money Weekly. And here he is, Jerry Robinson.
All right, friends, welcome to this episode of the Follow the Money podcast. My name is Jerry Robinson. Today's episode number 511. We're calling this episode The Robot Economy. Now, really, we're building on our last episode number 510. I hope you had a chance to catch it. We talked about artificial intelligence and the future of work. We talked about builders and sellers and measurers and what that means, how to understand the future of AI. But this week, we're taking the next step because AI is no longer just about large language models and chatbots and software and digital assistants and all of this. Really, what we believe is the next wave of AI is going to be physical AI. We're talking about robots in warehouses and automation in factories, autonomous vehicles on the road. We're talking about AI-powered machines that can see and move and sort and lift and deliver and act in the real world. And we call this the robot economy. Now, in many ways, we already have it. We're going to talk about some companies on today's broadcast that are already doing this, but I'm talking about seeing the robot economy really saturating the entire country at the consumer level as well. So in today's episode, we're going to begin in segment 1 by talking about what physical AI is and why it's happening now and why it could be, in our opinion, one of the biggest investment themes over the next decade. Then in segment 2, I'm going to share 5 stocks and 2 ETFs that investors can use to track this powerful trend of physical AI. And then finally, we'll close out the show with a few final thoughts and today's final word. As always, I'm very glad you're here. Let's jump right in. All right, friends. So as I mentioned in our last episode number 510, we talked about artificial intelligence and the future of work, right? We looked at how AI is really beginning to reshape the workplace and how workers and business owners, entrepreneurs, investors, they all need to think differently about this new technology. The main point that I was trying to make in that episode, which, by the way, we got a lot of feedback from, and I really appreciate hearing from all of you. You can always go to our website, followthemoney.com/contact, if you want to send us a note. We got a lot of great feedback from our last episode on the topic of AI and the future of work. We talked about builders, and we talked about sellers, and we talked about measurers. Really important. I encourage you to go back and check it out. But the main point I was trying to make in that episode last time was pretty simple. It's just that the winners in this new economy that we're in will not necessarily be the people who know the most today, right? The winners are going to be the people who have a commitment to keep learning, the people who can adapt, and the people who can learn and then unlearn and then relearn, right? Really important stuff. I'm kind of oversimplifying that episode. I encourage you to go back and check it out. Well, today, what I want to do is I want to build on that conversation because when we talked last time, we talked about what happens when machines learn to think, right? This week, I want to talk about what happens when machines learn how to actually act. Because for the last few years, most of the AI conversation has really centered around software, like chatbots, ChatGPT and Anthropic, and all of these various large language models. And then, of course, digital assistants and AI search, which Google has been rolling out like crazy. AI coding tools, which are changing the game for coders, like Codex, and of course, the Anthropic tools, Mythos, was just recently dropped. And then you also have AI image generators, which have been mind-blowing, right? Nano Banana and many of these various tools that are really incredible. AI systems that are writing and they're summarizing and they're analyzing and reasoning. Well, that's really the AI that most people have been exposed to up until this point. But I think that the next major phase of this revolution is going to be much more physical, right? Obviously, that's really where things are going. It's going to involve machines that can see and that can move and lift. They can deliver and assemble and inspect and interact with the real world. So in other words, the next phase of AI is not just digital, it's going to be physical. And that's where we begin to enter what I call the robot economy. And that's already here, by the way, in many, many places. It's just a little unseen for many people still at this point. And I think we're going to see that change dramatically over the next decade. But as I mentioned, it's already in the warehouse, right? It's already on the factory floors and the fulfillment centers at Amazon. It's in the logistics networks. It's in autonomous vehicles like Teslas. It's in delivery systems and manufacturing and supply chains. But the thing is that it's mainly in places that most consumers don't see. And that's why I think this has the potential to be such a big investment trend, because those often happen when people aren't looking, or when everybody's not paying attention. They really begin behind the scenes. So before the internet became social media and streaming video and all of this that we have today, it was about routers and servers and cables and infrastructure. And you think of all of these early .com names that kind of got big and then went away. Some of them survived and went on to do great, but not all of them did, right? So before smartphones, we can think the same thing. They obviously changed the world, but before they did, there were semiconductors and wireless networks and the need to improve battery technology and all of the things that we now take for granted today with smartphones. And that's what I'm saying here that I believe about this current robot economy, which is going to show up in the average home. It already is beginning to, but I think we're going to see it a lot more over the next decade. And it's obviously being built inside right now, factories and warehouses and logistics centers where many people aren't seeing it, right? So that's really what I want to focus on in this first segment, is why physical AI is really going to become such an important theme. And I think there's 3 reasons. First of all is because artificial intelligence has become so much more capable in recent years. I remember having friends who were in the artificial intelligence industry back in the 1990s and even in the early 2000s. This is an industry that's been around for a long time. They've been working and working, but the advancements have been incredible in recent years. So we're really kind of in this domino effect where so many things have happened now, and now AI has become so incredibly capable. If you've been using chatbots or any kind of image generators, you also know this. I remember when I first made an image with ChatGPT and even with Google Gemini when they first, were kind of coming out, and the images back then that you could generate versus the images that you can do today are just, it's like night and day, right? It's incredible. So what I'm saying is that AI is becoming more capable by the day. And these systems can now process enormous amounts of information. They can identify patterns, and they can make decisions in ways that were just not possible even just a few years ago. So first, you got AI becoming much more capable. The second reason is that physical hardware has also improved. So sensors have become much better over the years. Cameras are incredible, and just the camera you have in your average iPhone today is just simply incredible. Battery tech has just off the charts, and we're still need to improve. But when you just compare where we were, say, a decade ago with battery tech, or even motors and actuators, those have become better. So robotics hardware is becoming more and more capable. And over time, it's also getting more affordable, which is really the bottom line for the consumer. And then third, the world has obviously a labor problem, right? And this part kind of gets overlooked. You have many countries that are getting older. You have birth rates that are falling in many countries. Labor shortages are a real thing in many different industries. Factories need workers. Trucking companies need drivers. Healthcare systems are understaffed many times. Construction companies need dependable, skilled labor. And businesses are always under this constant pressure to do more with less. And so when we talk about physical AI, I don't think the story is simply robots are replacing people. I think that's too shallow. In many cases, physical AI may help solve labor shortages that are already here. So the robot economy may not be arriving because humans have become unnecessary. It's arriving because there aren't enough humans available to do all the work that needs to be done. And I think that's an important way to frame this trend, because if you end up thinking to yourself, well, the robots are going to replace all the jobs, that's not, it is true that we're going to see some jobs just eradicated by the robot, right? Just like the same thing happened with previous technologies. And I don't want to belabor that topic this time because we talked about some of those previous technologies before and some of the similar fears that people had of, okay, well, this is going to destroy the workplace, or it's going to destroy this entire industry or this whole sector. Well, I think that's not the right way to think about it. I think it's better to understand that there really is a major place for robots in our economy. And it's important for us to be ready for this because it's already here. Consumers, I believe, when they get their first taste of AI-powered robotics, it's going to be, it'll be too late at that point. I think everybody's going to really like it. For example, if you've ever sat in a Tesla and had the Tesla drive you around in self-driving mode, in the supervised mode, then you know how powerful robotics can be in a vehicle. Autonomous vehicles are simply incredible. And the first time I sat in a Tesla and was, rode around and was not driving, was just literally pushing a button and it was doing all the work, I thought, wow, this is a powerful robot. This robot's driving me around. It was like somebody else was in the car with me, driving the vehicle. And that's where I want to go next. I want to talk about from that investor's perspective, right? The big question, it's kind of obvious. Who are the companies that are going to lead to this transition of physical AI? Who are those companies? Well, there are many names, and I'm not going to list all of them today, but I'm going to be going deeper into physical AI with our members on an upcoming webcast. I want to do a special webcast on this topic because there's a lot of companies that are in this space that many people haven't even heard of, let alone know that they're actually in this space. So I'm going to be talking about that very soon here in the next couple of weeks for our members through our Trends and Profits webcast. We do that every Tuesday live at 10 a.m. Central Time. But there are names we can discuss now. And when we come back from this brief break, I will share with you 5 stocks, 4 of which I own for the long term, and 2 ETFs that will allow you to gain access to the physical AI economy that we see coming. Hang tight. We'll be right back. Hey friends, Jerry Robinson here from followthemoney.com. Before we continue with today's podcast, let me just mention something really quickly. If you've been listening to the podcast for a while and you're starting to think more seriously about your own situation, your investments, your retirement plan, and how everything is actually structured, there comes a point where it helps to talk it through with someone. And that's why we created our Follow the Money Advisor Referral Service. We work with a network of trusted financial professionals across the country, and we can connect you with someone who can help you take the next step, whatever that looks like for you. Maybe it's reviewing your current retirement plan, or maybe it's putting a real income strategy in place, or maybe you just have a simple question like getting a life insurance quote. If that sounds helpful, you can learn more at followthemoney.com/advice, or just give us a call at 800-609-5530. No pressure, just a chance to get some clarity around where you are and where you're going.
Welcome back to Follow the Money Weekly. And here's Jerry Robinson.
All right, friends, welcome back to the podcast. Great to have you here. And in this segment, I want to focus on 5 stocks, right? 5 companies that do not all look the same. We have Tesla, we have Symbotic, we have Amazon, we have NVIDIA, and we have Uber. I want to talk about all 5 of those. And then I want to talk about a couple of ETFs here in just a minute. So Tesla, Symbotic, Amazon, NVIDIA, and Uber. They're not all competing in the same markets, but together they are really shaping the robot economy that we see coming fast and furious. Let's start with Tesla. Most people still think of Tesla as an electric vehicle company, and that's understandable because Tesla became famous by changing the automobile industry. But I think investors need to be careful about viewing Tesla too narrowly because at its core, Tesla is increasingly an AI, robotics, battery tech, and manufacturing company. And that's why its Optimus humanoid robot project is definitely worth watching. I've almost decided myself that I'm going to buy one of these when they come out, if not just for the ability to understand the new economy. I already own a Tesla vehicle. I found the Tesla vehicle to be incredibly powerful. The robotics behind this vehicle, the AI, I mean, it's just incredible. What it's like. And if you've never sat in a Tesla before, you never had that experience, I encourage you to go take a demo drive, use the full self-driving, expose yourself to this technology and see what I'm talking about. Now, when you think about humanoid robots, though, in your house, I mean, it kind of gets like Jetsons. You're thinking of the future. You're thinking, this is weird. Humanoid robots are difficult, right? It's a very, very, very complex technology, and it's still very early. The timeline also is somewhat uncertain. We had already heard that Tesla was going to release this Optimus humanoid robot a while back, so it's not really on schedule. Investors should never really assume that every bold promise made by Mr. Musk is going to become a reality on schedule. But here's what makes Tesla interesting from my perspective. Tesla already has real-world AI experience. It really is, in my opinion, the leading physical AI company right now. It understands battery tech. It understands the vision systems that are required. It understands the software. It understands the data. It has a massive manufacturing base already, and it has a culture that really pushes aggressively into difficult engineering problems. So if Tesla can eventually build a useful humanoid robot, which I believe it will at scale, the opportunity, I think, is going to be simply enormous. And I would even say probably even larger than its car business over the long run. And that's a 10-year discussion, right? We're not talking about something next quarter. That's at least 10 years down the road before we actually really begin to see that materially happen. Maybe longer, let's be honest. But I really believe this is where we are heading. But for investors who are trying to understand the robot economy, Tesla really belongs, I think, at the top of that list when you're looking for physical AI companies. Now, another company, and by the way, I own Tesla. I'll share with you which stocks I own. I own most of the companies we're going to talk about today, not all of them. But in full disclosure, I'll tell you if I own the stock. I own shares of Tesla. I've owned shares of Tesla for some time. I think that there's a big, long runway ahead for that company. Is it priced for perfection? Sometimes it is. Sometimes it comes down in price. I like to add it whenever it gets knocked down in price. Okay, but let's move on to the second company. This is another company that I own, and I think that it's also a world-changing kind of company, and it's called Symbotic. This is one of the more interesting names in the entire physical AI space. And Symbotic, what it does is it focuses upon warehouse automation. This is a company that Walmart was so impressed with that it actually began to buy large chunks of the company because it was using Symbotic's warehouse automation tools regularly. So it literally just bought part of the company. And I began adding this company some time ago. It's been probably, many months ago, probably a couple of years ago. And warehouse automation, though, doesn't sound very exciting, does it? It doesn't really make for flashy headlines. But think about what a warehouse really is. It's like a big, giant physical puzzle, right? You got products coming in, you got products going out, you got inventory that has to be stored and tracked and moved and sorted, and then, of course, retrieved and shipped. And all of that has to happen quickly and accurately, right? That's exactly the type of environment where robotics and AI can really create enormous value. And Symbotic is not really trying to build a robot for your living room. It's trying to automate one of the most important parts of the entire modern supply chain. It's working on that warehouse automation. I mean, in our current age, the modern economy depends on the ability to move goods efficiently, and companies like Symbotic are helping build the automated backbone of that future. And that's why I consider Symbotic one of the pure plays on the robot economy that's available to public investors. It's not really a household name right now, but in my opinion, it's a company that serious investors should at least understand. It's one that I own for the long term, and it's recently come down in price, so I may be adding a bit more of that stock to my holdings this week. We'll see. I always alert our members in real time every time I add a stock to my long-term portfolio. by email and also on our private X page. Okay, now let's talk about the third company. We talked about Tesla, number one physical AI company, I think, in terms of the future. Number two, Symbotic, definitely a lesser known name, but I think one for investors to really understand who are interested in this physical AI space. Number three is another company that I own, and that's Amazon.com. Now, Amazon is a little different because it's already operating at tremendous scale. It's not just talking about robots, like it's already using them. If you've paid attention to Amazon's fulfillment centers, or if you've done any kind of deep dive into what Amazon has been spending money on, you'll find that it's been spending years and years investing in robotics and automation. But the average consumer just doesn't really think about that. They just order something online, they click the buttons, they expect it to show up quickly. But behind all of that action is this enormous physical infrastructure of warehouses and sorting centers and delivery networks. And then, of course, robots and software and inventory systems that are automated. So Amazon is one of the clearest examples of the robot economy already in motion. And Amazon really shows us that physical AI is not just a dream. It's already being deployed where there is a clear business case. Amazon has to move lots of packages. It needs to do it without errors. It needs to do it with great speed and efficiency, and it needs to do it at lower costs over time. That's what businesses want, and that is where the robot economy begins. I own shares of Amazon for the long term. So far, I own all of these companies. I'm going to name 5 companies altogether that are part of this physical AI economy that we see over the next 10 years doing very well. And so far, I've shared with you 3 names. Let's talk about the final 2. I own this 4th company. The 5th one I don't own, although I do like it. But let's talk about the 4th company that I own and that I think is just dead center in the middle of the physical AI economy, and that is NVIDIA, right? Now, NVIDIA may not be building the robots, but it's really helping build the brains of the robots. And in the robot economy, the brains are the most important part, right? They need computing power and visual information that they have to process. They have to understand their environment. They have to make decisions, and they have to learn. They have to be safe in their operations. And all of that requires hardware and software infrastructure. And NVIDIA has become one of the most important companies in the AI revolution, if not the most important, because its chips and platforms really power the modern artificial intelligence solutions that we're seeing today. And that's what's exciting for NVIDIA, because as AI moves from your computer screen, which we're all using today, into the physical world, NVIDIA is going to remain at the center of that story. So it's not going to change its trajectory. It's been anticipating the physical AI economy for years and years. That's why NVIDIA has done so well in this current environment, is because it was prepared for this moment. You see, autonomous vehicles need compute. Humanoid robots need compute. Industrial automation needs compute. So all of these AI-powered machines are going to need compute. And so while Tesla and Symbotic and Amazon may be more visible examples of physical AI in action, NVIDIA is one of the foundational companies helping make the whole thing possible. I own NVIDIA for the long term. In fact, NVIDIA is my largest long-term stock holding in my long-term investment portfolio. So we own it for the long term, and we see a lot more growth ahead over the next decade. Let's talk about the 5th company in this physical AI economy that we see really dominating over the next decade or so. And that 5th company I don't own, but that company is called Uber, right? Now, Uber might not be the first name people think of when they hear robot economy, but I think it's one of the more interesting long-term angles, because transportation is really one of the largest markets in the world. And if autonomy continues to improve, which I think it will, the transportation business is going to change dramatically over the coming years. Uber has already built out a massive global platform that connects riders and drivers, but over time, the driver side of that equation is going to change. Right now, it's mainly human drivers, but we see a future of autonomous vehicles, and that's exactly what Uber has talked about. This is the future we often hear about, robo-taxis, right? Autonomous delivery, autonomous vehicles delivering goods, autonomous trucks on the road, and then, of course, robo-taxis, which are a huge, huge market. So the key point is this, is that Uber doesn't really have to manufacture the robot. It can benefit by being the network for the robot economy, right? That's a really powerful position for Uber. So if autonomous transportation becomes a major reality in all of the cities here in the United States and abroad, Uber could potentially participate without having to own every vehicle or build every piece of technology itself. So Uber has a really interesting growth model and business model. I probably should own the company. I do believe that it's going to have, if you look at the growth rates for Uber over time, it looks really positive. And Uber has, kind of been up and down lately. It's a company I think is going to do great. If you own it, I think you're going to be happy over the next decade. But, who knows what's going to happen over time. I also want to give you a quick warning here is because obviously, while these companies that I've listed all are well positioned for a physical AI economy, we need to be clear that autonomy has taken longer than many people expected. I mean, the road ahead is going to be complicated. Regulations and safety issues are going to be very, very complicated. And then, of course, consumer trust, which is also hard won. But again, we're talking about the long-term trend. We're not making any predictions about what's going to happen tomorrow or next week. So when I look at the robot economy, I don't just see humanoid robots, right? I see autonomous transportation. I see delivery networks that are completely autonomous and logistics and platforms. And that's where Uber really becomes interesting. Now, before I close out this segment, I want to talk to those investors who aren't maybe interested in individual stocks. Instead, they'd rather be focused upon exchange-traded funds or ETFs that provide kind of broad exposure to robotics and automation. And here at followthemoney.com, we have something we call the ETF leaderboard, where we track 150 different ETFs for our members, and we rank them based upon their momentum and also based upon their trend. But two that I am drawing from our ETF leaderboard that I want to highlight on today's episode. But the first one is the ARK Autonomous Technology and Robotics ETF, known as ARKQ. I just call it ARKQ. And this is probably the more aggressive ETF option in this physical AI space. I mean, you can tell that just by looking at the top 10 holdings in the ETF. Tesla's at the top, AMD comes in number 2, Teradyne comes in number 3, Rocket Lab comes in number 4, on and on. So there's quite a few interesting names in that ETF. And it is that more aggressive option. It focuses upon autonomous tech and robotics and transportation innovation and many other disruptive themes around this same space. ARKQ can be volatile, just like a regular stock can, although with ETFs, you typically see a little less in terms of volatility, but this one tends to be volatile. That needs to be understood. But for investors who want exposure to the more speculative side of this trend, ARKQ, is worth knowing about. And then there is the Robo Global Robotics and Automation ETF. That's ticker symbol ROBO, or Robo is what I call it. So Robo offers broader exposure to robotics and automation and is really the more diversified approach to this space using an ETF. It's definitely less tied to one single story, less dependent upon one company, and potentially useful for investors who believe in the robot economy but don't want to make a concentrated bet on just one or two names. So you can really think about it this way. Tesla gives you the humanoid robot angle, right? And then Symbotic gives you the warehouse automation angle. Amazon gives you the large-scale deployment angle, which they're already massively in the robotics industry. NVIDIA gives you the AI infrastructure angle. Uber gives you the autonomous transportation platform angle. So, all of these physical AI. And then if you look at the two ETFs we talked about, which I don't own either one of these, but we do track them for our members, ARKQ gives you the more aggressive ETF approach, and Robo gives you the broader robotics and automation ETF approach. So together, these names provide a really useful framework for thinking about the robot economy. Now, let me bring this back to the bigger picture as we bring this first segment to a close. Every single major technological revolution begins with skepticism, okay? That's totally normal. When the internet emerged, many people dismissed it. When smartphones emerged, many people underestimated them, right? When Bitcoin emerged, most people mocked it. When AI chatbots emerged, many people dismissed them or misunderstood them. But that's exactly how real innovation tends to begin, right? It usually looks small and strange and impractical, but then the technology improves and then the costs fall and adoption grows and the business models become much more lucrative. And suddenly what once looked like a novelty becomes part of our daily life. I believe physical AI is probably going to follow a similar path. At first, we've been seeing it show up in controlled environments. We've seen it in warehouses and factories and distribution centers and industrial settings. These are places where the task is repetitive, the environment is structured, and the economic benefit is obvious. But then over time, these systems become more capable, more flexible and affordable, then they become more widely deployed. And that's why investors need to think in terms of years, not weeks or months when it comes to this trend. Because that's what the robot economy is. The robot economy is not a trade, it is a trend. It is a long-term trend that I believe is here to stay. And as you know, here at Follow the Money, we care deeply about identifying major trends before they become obvious to everyone else. And we do that not by chasing every stock and ignoring risk and buying all the hype, but we do it by paying attention. We study, we watch the leaders, we really closely monitor charts, and we manage our risk accordingly. That way, when the right opportunity appears, we're ready. So here's the simple takeaway. The first wave of AI brought intelligence to software. The next wave is going to bring that intelligence to machines. And when intelligence gains eyes and hands and wheels and mobility, the investment implications are going to be enormous. The robot economy is literally coming into view. And for long-term investors, I believe that this will become one of the most important investment themes of the next decade. All right, friends, welcome back to the final moments of today's broadcast. And as we wrap up today's episode, I want to leave you with a few thoughts. You know, the robot economy that we have been talking about today is not some sort of far-off science fiction idea. It really is already taking shape in warehouses and in factories and in logistics networks, in autonomous vehicles. It's in the chips and software and sensors and machines that are beginning to bring AI into the physical world. And for savvy long-term investors, that's what makes this so interesting. Major trends rarely announce themselves with a trumpet blast, right? They usually arrive very quietly. You have a new technology that appears and most people will ignore it. Then a few early companies begin using it, costs begin to come down, the technology improves, adoption grows, and then one day everybody says, hey, how did we not see this coming? So that brings me to the final word. Theodore Levitt once put it this way: the future belongs to those who see possibilities before they become obvious. I think that's a really great investing lesson, because by the time a trend is obvious to everyone, much of the easy money has usually already been made. The real opportunity is often found in that early stage when the evidence is there, but the crowd hasn't fully connected the dots yet. And that's where I think we are with physical AI. The possibilities are beginning to come into view. We see Teslas working on humanoid robots that are going to be in homes, not just here in the United States, but around the world. We see Symbotic automating warehouses to the point where Walmart is extremely interested in actually buying part of the company. We see Amazon already deploying robotics at a massive scale. We see NVIDIA helping provide the brains for the build-out of the future of AI. And Uber is positioned for a future of autonomous transportation, made possible by robotics. And then you have ETFs like ARKQ and Robo that give investors broader ways to follow the theme. And like I said earlier, there's obviously going to be risks in this space. And certainly every company is not going to win. But it does mean that we should be paying attention, studying that trend, watching the leaders, respecting the charts, and then staying open to possibilities before they become obvious. That also reminds me of something William Gibson once said when he said the future is already here, it's just not evenly distributed. I think that perfectly sums up the robot economy, right? The future is already here. It's just not in every warehouse yet. It's not on every road or every factory or every home yet, but it's spreading. And for long-term investors, that's the key. You know, the trend is your friend when you recognize it early, follow it patiently, and manage your risk all along the way. Well, that's all for this week's edition of the Follow the Money podcast. Thank you so much for joining me. Don't forget you can get more investing insights, market education, member resources, all of our courses, all of that over at followthemoney.com. Until next time, remember, when you want the truth about the global economy, just follow the money. Have a safe and prosperous week, and we'll see you right here next time. Until then, God bless.
Contained on the Follow the Money podcast is strictly for informational and educational purposes. It should not be construed as specific investment advice. The views and opinions of our guests and sponsors, including Tom Cloud, are their own and do not necessarily represent the views of FTMDaily.com or Robinson Media Group, LLC. Jerry Robinson does hold an insurance license and at times may offer consulting on life insurance and fixed retirement income products. Follow-up, individualized responses to email or phone requests that involve the rendering of personalized investment advice for compensation will not be made absent compliance with state investment advisor registration requirements or an applicable exemption or exclusion and applicable insurance regulations. Past performance is not indicative of future results. You should be aware of the real risk of loss in following any strategy or investment discussed on the podcast. Remember, never do your financial planning through podcast or radio. It's your money. Be wise. Do your due diligence and always consult a trusted financial professional before making any financial decisions.